Hey, everybody. Welcome to Steve Couper's podcast for aspiring real estate investors. In each episode, we connect with seasoned investors and industry subject matter experts who are eager to share their experiences and tips for success when investing in real estate. Now, before I forget, if you're enjoying this content, please make sure you hit the like button. And if you think your audience might enjoy it, please feel free to share it. And most importantly, if you want to see more, please hit that subscribe button. Right. So today is a great day. I'm really stoked. My guest has spent more than 2 decades helping Canadians build wealth through real estate and private market investment. She's an investor-focused realtor, an exempt market dealing representative, and someone who believes that real estate is more than just buying property. It's about creating long-term financial freedom and generational wealth. Serving clients across Ontario, British Columbia, and Alberta, Stacey Chan has built a reputation for helping busy professionals make confident investment decisions in an increasingly complex market. So now bringing Wall Street level investments to the retail market. Stacey, welcome to the show.
Thank you so much for inviting me. And I'm really happy to share my knowledge with the people because that's what I went for. And I want to share the rainforest and give the umbrella to people, right? Like when you're in the rain. And that's what I'm very, very passionate about, my experience to share.
Very cool. Very cool. Um, so let's get into a few questions. So, first off, a little bit about your background. So most people today know you as that real estate professional and wealth advisor, but that's not where your story started. Now, if I understand correctly, you also have a master's degree in mechanical engineering. Is that correct?
Yes.
Ah,
Wow.
about
Good,
that, eh?
good, good. Yes. So I studied engineering at U of T in Toronto,
Yeah.
and I did my master in mechanical engineering in University of Waterloo. And actually, I've been practicing engineering and I get a profession PNG license as well.
Oh, cool.
However, yeah, during all these years, I'm always into investment because I think for us, there's a limit as an engineer, right? And a lot of engineer or salary people, they're taxed the highest.
Yeah. So
The
that's
hard earned, yeah.
I was thinking, that it's right interesting because most of the engineers I know are incredibly intelligent, they're analytical, and they're naturally risk averse. And yet so many of the wealthiest engineers I know also become real estate investors.
Yes.
Yeah. I was going to ask you, so why do you think that is?
It just like try to explain if you get a salary, your income is taxed 40-50%,
Mm,
right? You have earned the money. I even do a calculation analytical, right? You earn, let's say 100K, 40-50% is gone. Now you only have 50,000. And if you just rent a property, 2,000 a month, easy, like one bedroom, right? Now you only have 30K. Your car, your insurance, your utility, your food, don't blame them that they don't work hard. It's just nothing left on the table.
yeah.
So what I found is what I can do so that I can build generational wealth, I can retire early, I can have the freedom that I want to leverage. You don't just leverage other people's time or money, but you are leverage other skills, right? So leverage is how you can expand.
So leverage is how you can expand, but as I mentioned, all of the engineers I know are extremely risk averse. So how do you find the right way to, or what is it that you needed to do to find the right mindset for allowing you to invest in something, right?
Oh,
Ladies and gentlemen, before we get started, I'd like to thank the sponsor of today's episode, the Savvy Investor. One thing I've learned in my real estate journey is that success isn't just about finding great deals. It's about surrounding yourself with the right people, the right education, and the right support network. And that's exactly what Savvy Squad provides. Whether you are just getting started or already building a portfolio, you'll gain access to weekly live coaching, expert guest presenters, deal analyzers, training resources, market updates, and a community of like-minded investors who are all working toward exactly the same goal as you, financial freedom through real estate. So right now, If you scan this QR code, you can take advantage of a 14-day free trial and a special membership rate of $147 a month. Now, that's a savings of over $600 off your membership. So check out Savvy Squad today and see how far the right community can take you. And now, let's get on with the show.
Oh, yeah. So actually, very good question. So what I do is, as analytical, we do analysis, cash flow analysis. When I buy property, I always buy cash flow property, right? And so that you already reduce your risk. And when you actually purchase your property, I always tell people buy below market. You never know when is the bottom. At least you buy below market, you have the extra buffer.
Yeah.
And also things can change. Things can change. Big capital expenditure, big repair, which people rarely mention, but that is a huge problem, right? 20 grand, 50 grand for a furnace. What you need to do is like also a contingency fund to make sure, yes, normal operation is running properly, but what if something goes south, you still have the money. And that's why I'm doing all this portfolio building, not just real estate. Because if your real estate is very illiquid, relatively low cash flow, that's why you need a different asset class in case you need money. You can supplement it, and it's a whole ecosystem. And a lot of people, what I see is they only focus on one thing, financial, or they only focus in real estate. But it's actually when you're building wealth, it's a whole economic system. So yes, there's risk, but you just need to do a calculated risk. What if this happened? What's the contingency plan?
It's so important, I think, to have that well-rounded portfolio. I couldn't agree more. Let's dive into this a little bit then. So you often say protect your principal first. Now, I agree with that, but why do you say it?
Because I lost money.
There we are.
It's my big lessons, and I actually heard this from Warren Buffett, but you don't feel it until you actually happen in your life, right? And people used to be many years ago, people will say, give me 20%, 80%. Like, wow, that's what I look at. They're famous, they're celebrity, or they're on stage. You just think that they're smarter. But a lot of time they're actually just over leveraging. So I lost money, and that's why I think very important is to preserve your capital. Even if you look at 10%, but if you can consistently getting 10% compounding, it can make a huge difference. Then somebody gives you 50%, but your capital is zero.
Yeah. Yeah, no, it's absolutely imperative that people understand this. But, so many intelligent people still make poor financial decisions. Why do you think that is?
I think maybe they're overconfident, and also they never went through a cycle. I went for a cycle 20 years ago. I come from Asia. So at that time, real estate was actually having a bubble and crash. So at least that was in my mindset that I learned I need to make sure I buy cash flow properties. Right. But later on, of course, I get into a private market and I thought, wow, like people seems like owning more property than I do. They know what they are doing. But again, I think it's again the economical cycle that you haven't gone through, you haven't lost your capital, you don't feel it. Right. And I run business. I actually do a lot of things. I run multiple business before, right? How to manage people, how to do tax and all this. So I know our business is not that easy, right? There's a lot of capital expenditure. So I think it's experience also. They're overconfident. They are too greedy. I think they're too greedy and just doesn't have the risk mindset. Now I'm risk mindset everywhere.
There you go.
I apply it everywhere.
Do you think emotions sometimes sabotage investing, and how so?
Yes, it does. Like for example, just a few months ago, war, and then the gold was like jumping a lot. So I'm like, wow, everybody's earning like 60% in a year. Like I'm going to jump in, right? But I think very important when I tell people is, as an investor, seasoned investor, disciplined. You know the principle and you stick with the discipline. So I said, okay, when people are so greedy about it, I need to control. And actually, that's how I stopped it for the goal. I'm like, okay, great. Now it's dropped like 30, 40% back to last year's. If I have gotten it at that point, I don't know how many years it might take it to recover. Right. So, yeah.
Best to be conservative and in your calculations and factor for the things that can go wrong. And if they don't, great. If they do, you're prepared.
Yes, exactly. And make sure you always have contingency plan. I'm not telling people to be super conservative and not doing anything. But what I always tell people is, what if your investment goes zero? Can you still survive?
Yeah.
Right? And right now, for example, what I do as an EMD, I help people build portfolio. So a lot of private market, they only have one lump sum, 100K into one. But what we can offer is a range of products. So I really spread the investment. So in case one really goes south, you still have 5, 6, 7 of them, right? So there's a lot of strategy to reduce your risk. For real estate, you screen your tenant, right? Something like that. Just multiple steps to reduce your risk.
Absolutely. Hey, let's explain this a bit further. So what exactly is an exempt market?
Exempt market is like, what we do is pretty much it's a private investment that doesn't get in the public market, like traditionally stock, bonds, mutual fund. They're the traditional ones, right? But the exempt market is private. But yet, lots of people doesn't know. There's two main reasons. One, it used to be only allow for the rich to get richer, accredited investor to invest in that. Number two is it's just private. You just never heard of. You cannot get access to, right? So that's why I get into that few years ago, and I really love it because a lot of investors, they are very buying emotionally, even in real estate, in stock market. This is human weakness, right? So that's why I want to go to private market. They don't have that human interference. And as an engineer, it's actually mathematical. The business, how it runs is actually, okay, I know why you get cash flow and things like that. It makes sense, but not the market sentiment.
So, you mentioned it's for the exclusive, high net worth individuals. That's the tradition. Is that changing?
Yes, it's actually changing. In the last 10, 20 years, a lot of institute, actually, let's say Yale endorsement fund, lots of institute and even pension fund, what they realize it in the private market, they actually earn more consistent money than the public market. We all have data. It's all data driven. And they got better return. They're more stable, more predictable. So they actually, if you look at, I have a slide, if you look at the pension fund in 2014 Canada, they have over 40%, close to 50% is in stock market.
Yeah.
And only about 20% in the private market. Now, 2024, they reversed. They actually have more they actually have more in the private market than the public market.
Interesting.
Yeah, this is all statistic, not from noise. A lot of time when I said it's like noise, news, right? But if you really look at the fundamental, actually a lot of institution, big endorsement fund, pension fund, they all go into a private market. Yeah. The recent one was the SpaceX, the teacher union pension fund, I think. They were celebrated because they invested in SpaceX a few years ago.
Yeah.
Yeah.
It's interesting. I mean, you mentioned the noise. There's so much of it out there. How should somebody educate themselves to be wiser as they're approaching investing in private markets? How would they learn about this?
I think it's a little bit difficult for private market, to be honest. Public market is much more exposure, right? So I think you just need to find accredited people, which is hard to find. Even I experience it, right? So that's why I go with InnoWealth is one of the big ones in the private market. One thing is find some very accredited company, very accredited investor advisor. try to go to seminar, but that need to be cautious because right. So not everybody is being honest. Because to me, there are four main goals for investment. One of them is integrity. And if you don't find the group that have integrity, you can be in jeopardized. So try to explore more options, find a very accredited people, and maybe listen to your podcast.
There we go. I love it. Way to go.
Yeah, that's what I found really, and you really need to know the people. I think I do have the reputation out there.
Yeah.
So you just need to find the right people who really truly care about you.
So, if somebody's thinking about their investment portfolio, how do they balance stock, real estate, private investments? What should somebody be thinking about in order to have a secure platform? What are your thoughts on the allocations?
Yeah, standard wise to be about quarter. What we say is like quarter, like real estate, cash, public market, private market. But what I always tell people, each person is different. Some people have more free time and they like the excitement of stock market. Then maybe they can allocate more, right? If they're comfortable, they know it, right? They know it really well. But if some people, they are retired, they don't know too much. They don't like the up and down. They're comfortable with private market, then stay more in the private market. Or some people actually, to me, as you get older, dealing with tenant and the capital gain tax in the real estate may be becoming more difficult. They actually want to reduce the holding, right? So each stage is very different. So to me, I always tell people not one fit all, one go fit all. They ask me all the time, Stacey, which one is the best investment? It's not, there's no best. It's only best fitting you, right? Some people, I'm younger. I have more capital. I have my foundation built already. So now I'm pushing more AI. I put more into my AI, right? Because I'm really focused on real estate. I too much, right? So now I want AI. But some people, they don't have a job. They're retired. They need consistent cash flow. They're professional that they don't have time for tenant. Then go to a private market. You've got monthly distribution. And it's usually a return of capital. So you don't need to pay tax right away. So each person have their own strategy.
I think that's great. I think that people need to actually always consider their own situation instead of looking at the hype and trying to follow the crowd. You got to figure out what works for you.
Exactly. Yeah.
Let's see. So, if I were to think about it, you also spent a little bit of time in quality control as an engineer, right?
Yes. Wow.
I had to do my research.
Yes.
And a lot of your focus there would have been focused on trying to prevent defects before they happen. Did that actually help form your mindset as you look at what you're doing with investing now? How did any of the engineering and quality systems you worked in the past help shape who you are today?
Oh, absolutely. I think it makes a big time. Quality engineering is all about improvement and risk control. So improvement is what I always say. Something can be better, right? And real estate, for example, changing the mindset, I used to be very, very focused on real estate. I think it's great. But hey, this can be something better. How can I make my portfolio better? Because the tax is not as beautiful when I die, right? There's a big tax and then the tenant. And that's one thing I keep improving on my system. How can I reduce my management fee, reduce the cost? How do I move my asset from Ontario to Alberta? Like, how do I improve my portfolio just within the real estate? And then when I look beyond, I'm like, what if I die? I need to build a system. Quality is all about system. If a manager left, is your company gonna fail through? Is your business gonna go down? If I left, right, an employee left, is it gonna survive? Right? So very important to me is the system. How can I pass the wealth to the next generation without chaos?
But let's explore that. If your children inherited your investment philosophy,
yes,
but none of your money, would they survive? Do they know what to do?
I still think it's hard. It's what I always tell people is like fire in a fireplace. You have all these ingredients, but you don't have the spark.
Yeah.
You need the original, let's say capital, original idea. You need a spark. Not that they don't work hard. People work really hard nowadays, but they don't get anywhere. So I think we need the initial spark, nucleation. You need the nucleation. I forgot, the beginning, like the dust, the
Nucleus.
Yeah, that like the initial point, right? Once you have the initiation point, it's easier to expand. So yes, I can teach them that, but if I don't give them capital, it takes them maybe 10 years to get where they should be.
Yeah.
Right? So I think it's very important. And as I said, the system, the mindset, what I find is we always say, okay, as a real estate investor, let's look for deals, mom and pop shop. What I see is me in 20 years, that my building is going to be a mom and pop shop. Somebody going to take advantage of my kid because they don't know. They don't like it. They don't go for what I went through to acquire the property, to manage the property. They don't treasure it, right? I see that all the time. So they think, wow, I get this for no effort. Now worth 1 million. Well, even if somebody offer me 800K, I got 800K. But for you or me, we work hard for it. Even 10,000, we're gonna fight for it, right? But for the next generation, we really need to know that's the defect.
Yeah. How to have them learn the lessons that you've learned, or inherit the lessons you've learned without having to learn them over. I don't know how to do that.
That's why I built a system that I cannot do that. So what can I build in my portfolio that in case this one, they don't need to sell? Well, if everything runs well, they don't need to sell it, right? If they can pay the tax, that's why I have insurance. If they pay a tax, they don't need to sell it and still generate cash flow. And if they have big capital debt expenditure, I just sell off my financial asset. So that's why really to me is an ecosystem of the wealth building.
Yeah.
And what I see a lot of people lack is they don't see the whole picture, right? They only see part of it. And I think what I can give to people is the whole system that can make you survive the downturns.
Cool. So if somebody handed you $500,000 tomorrow, what would be your first 3 investments?
Again, I need to ask them. It's called KYC. Know your client, right? Is this 500 all the money that you have? Is it borrow the money? Do you need it in short term, long term? Do you need more of the cash flow? Are you in the high tax bracket? Are you retiring that you actually don't want any cash distribution? You want the return of capital. You don't want interest income, right? So that's why I said because of my background, I can give you the more holistic approach. If you run a business, I know you need liquidity. So I allocate investment that is, because in private market, sometimes they really lock down for a long time, right? But for us, our company, because we are very big, we have a wide range of products. So the shortest one we have is 6 months. So if I know you're doing business, then I allocate more into those for you. And I mathematically count them, hey, what is coming up renovation? What could be the money that you need in the short term? Then I calculate. So I stagger their investment so that they don't need to be all in one this, then they can maximize their return. That's the improvement side of my quality engineer. How can I maximize your return, but also give you the liquidity?
Nice.
So,
what changes in investing over the next 10 years excite you the most? You mentioned AI.
yes.
Tell me more. What excites you?
Yeah, I think it's AI. And I think I come from I've been investing over 20 years and my family background, 30, 40 years from back home, China. What I see is in the back home, when they are developing, even manufacturing, you do just one pencil. You can be a millionaire, right? Make a pencil, sell a pencil. But now, who cares? Everybody can make pencil. You don't, as an investor, you don't get that big growth anymore. So what I see is real estate, you don't get that big growth anymore. It's kind of plateauing, right? So for me, I want to be always ahead of people as an investor, right? But with calculated risk, of course, you allocate not 100% all in, right? So yes, manufacturing, but it died down. And for the big manufacturing to pivot is very hard, right? Boeing, for example, for them to make drones and AI, it's going to be hard. So now there's a new company going to replace them, right? So, and then I go to real estate and I see the real estate has gone through that cycle. Lots of people accumulated wealth over there. Do you think it's going to continue that curve? Probably not. It's just unsustainable, right? I calculated about 1 million. That's the affordability level. Over 2 million, you have much less demand, right? So again, it's not all mathematics. So you see, okay, used to be maybe I can earn 10%, but now the cap rate is like 4%, 3%. You know, it's no longer a good investment.
That's right.
But of course, you need some of it. You need some of it to hedge the inflation. What's the next wave? Because what I find in the last 20 years, you don't need to work hard. You just need to ride with the wave. Even you buy condo, you look so smart at some point.
Yeah, not today.
Not today, but you ride with the wave, right? When you're at the right wave, but of course, if you exit at the right time, you're still doing good. And it's just, I truly make an impact that a lot of people approach me saying something. I said, no, I don't want a short-term gain. I'm looking for a long-term that you will remember me, that you really truly feel the impact and like the time to tell the truth. I don't want to tell you the return is 20%. Let's say 10 to 20%. I always tell people the 10%. I want to be more conservative, and I'll tell you upfront that you don't have over expectation, right? And then people remember, oh wow, Stacey really helped me. She really have integrity, right? That's the people that I want to hang out with, and they appreciate and actually change people's life. Because I impact me the why. Because I wish somebody tell me the truth when I invest. I got lied about that they were doing great, but they just getting money from here to cover there. They don't tell me the truth. If some people would have told me that they were struggling, I wouldn't be where I was. I learned my lesson, which is really also is a good thing. But it's I see lots of people lost their money at their 60s, 70s. I'm like, it's very difficult. For me, I'm still kind of young, so I can, adjust it.
You have time to recover.
Right? But some people are like 60, 70. I'm like, oh my God, this is horrible for people. It's horrible. So I want people to remember me, and I see their beautiful faces, and I see message, Stacey, happy Mother's Day, happy birthday, happy, it's just so happy. That's what I want to people remember me, that I actually have impact to them.
So beautiful. I look at your videos and I see your messages are pretty consistent along those lines. Protect your principal first. Build diversified portfolios. Think about the long term.
Exactly.
I love that message. It's really taking the long approach to things. When some people think about investing in real estate, think they're going to get their money back in a year, it's really, guys, you need to be
not realistic.
Long term.
Exactly, long term. And what if that's why I keep telling people holistic approach. It is good in the long term, but what if something goes south? Do you have something back up? Plan B, plan C, contingency plan as quality engineer, contingency plan, right? So that you don't need to force to sell. Then you don't have issue. As long as you don't force to sell, you don't have issues.
Very Warren Buffett of you.
Yeah. I learned it the hard way.
Let's see. If you were to choose between 10 mediocre investments and one exceptional investment, which one would you choose?
What do you mean by mediocre?
Oh boy.
Like boring investment?
Boring. Steady growth.
Yeah. You know what? I actually love boring investment now.
Yeah.
I actually love boring because some people will come to me, Stacey, I'm earning 2-3% a month. And they use this strategy, derivative, option, leverage, and dog coins. And I don't know, it's so complicated. Can you really control the whole process?
There we are.
But yet, if you have a simple process, you have less chance of making errors. So for example, we have the storage rate or music royalty. Those are fundamental. People need music entertainment, which is the cheapest entertainment. Where can it go? Right? Those are boring. Coca-Cola, water, like it's the most boring stuff you need to build as a fundamental, the core. Maybe depends on your wealth, right? Maybe 60%, 70%. And then a little bit of the, the exceptional one, but don't be all in.
Yeah.
Actually, the more the wealthy the people, they're actually doing less of this. It's the not as wealthy people that they want to take the high risk. They want to have big return. And unfortunately, a lot of time, those are the ones that actually make them even worse. And now look at Korea. Lots of people are jumping the building, right? Because they think they can keep going and leverage to buy, and then boom. Yeah. I'm like, yeah.
Let's talk about one thing here that's caught my eye on your profile. You describe yourself as the wealth queen. Where did you come up with that? Where did that brand come from? What does it mean to you?
What does it mean to me? Wealthy in so many dimensions. I keep saying I want not just real estate, not just the public market, not just the private market, holistic wealth. I'm not an insurance broker, even though I know a lot, right? A mortgage, I know a lot of mortgage strategy, know a lot of option trading strategy and all this, but building wealth is not just one stream. Just one of my clients, he was doing transportation between US and Canada.
Mm-hmm.
And then his business go bankrupt because all his business is for importing and exporting between Canada, and the tariff come, done. Right? Imagine one black swan, the interest rate go up. How many people can really survive a 10% interest rate go up? And it can happen.
I bought my first house with 12.79% interest rates.
Right? It can happen. It really can happen. So you really, wealth queen is to tell people, I really want to educate people. Don't think me as just a realtor. Don't think me as just an exact market dealer. I help you build wealth in multiple dimensions.
Yeah. We've talked about wealth and strategy, and you touched on systems a little bit, and we've also talked about investing in AI. But have you been able to leverage AI in your systems to help you understand what investments you should be looking at? Or how is AI changing the way you're doing business?
Oh, I do. Actually, I'm building a portfolio. I use AI to help me build a form and do all the mathematics, right? Because used to be you have to do all these Excel. So I use AI for that. And something I use AI even for my video, right? Because I have all this idea, but English is not my first languages. I don't have those fancy word or convincing word that you might need to study a course for, like, the speaking.
But I was so impressed. I thought that it came naturally to you.
Yes and no. I think the idea is there, but the language, right? They use very fancy language that people like. I eat something. I always my father-in-law said, you always say it's good, it's good, it's good. Do you know other word for saying that? But there's a lot of word that people would say, like, for example, you don't say customer, you say client. So AI can help me just to improve on my defect, language defect, to make it more convincing, and more fluid, right? But the idea is there. Like, nobody can steal my idea. It's my 30 years of experience, but it does smoothen my process, how I speak. Yeah.
I like it. I'm exploring where it can be a benefit to me, and trying to at the same time maintain purity. Like, this is me talking; it's not somebody else. So somewhere in this, it has to resonate with who you are.
Yes, exactly.
Yeah,
exactly.
Stacey, we've touched on so many different things here. It's actually really been a good conversation. If somebody wanted to find you and reach out and say, hey, I'd like to learn more, what's the best way for them to do that?
I do have a Linktree. They can find me on Facebook, Stacey Chan, LinkedIn, right? Instagram, can email me. It's called wealth.builder.ca. I should say wealth queen. But wealth builder. wealth.builder.stacy@gmail.com, or can contact you to find me.
Yeah. Well, we'll make sure we put your contact information in this podcast as well. So, have you got anything that we haven't asked that you wanted to say?
No, I think you really do a lot of study about me. I think you search on the internet my background, my engineering job, and my education, and being a realtor and all that. Like, you do a very good job on studying your guests. Thank you so much. And you use very valid questions that I think will benefit a lot of people, right? And you show based on your experience. So you ask a really good question like system, quality. You link my background that you think is beneficial for people. So yeah, I think it's very awesome podcast.
Well, I think you bring a lot of value to your clients and to all of the audience listening today. So I've really enjoyed this. What is your why? Why are you doing what you're doing? What are your goals, and where is this going to take you? What do you think success looks like?
To me, the why, really deep down, the why is actually for generational wealth.
Mm-hmm.
I see the benefit of me as an immigrant for my dad. They working hard, so I have the freedom to do what I want. And I want this to be for my kids, that they have the freedom to do what they want. And in between that, I was struggling with these lies, all these traps. So I don't want people to went for what I went for. It's so painful because you're going to potentially lose your capital that you have been accumulated for generations and generations. So that really impacted me because my goal is generational wealth. And in between, there's a lot of bites, snakes there. And I want to help people to avoid those snakes. And so that's why
I love it. Let's put it down. Stacey's
yes.
help people avoid the snakes.
Right. So I think it's very, very, very important. I cannot guarantee you investment is no guarantee, but at least you need to have the integrity. But if people you deal with doesn't even have integrity, then it's just extra layer of risk. So I know I'm confident that I have the integrity to help people. That's why I'm so passionate, because I wish somebody do that to me so I wouldn't have lost that much money. Right. So that really, really impact me. And lots of people, because they went bankrupt. I see so many people went bankrupt because they don't have somebody like me to tell them the truth.
It's so true. A lot of our coworkers and friends have actually suffered with exactly what you're saying. They've lost their retirement fund.
Yep.
They no longer answer when you call. They're not interested in investing anymore because they've had such a bad experience. So their recovery plan, I don't know what it is.
Yeah.
It's such a sad truth.
It's so sad. And I always think about that. What if it's me? And that's why I really want to build a system for my kid to avoid that. How can I build a portfolio and educate them the portfolio, the system that, hey, in case somebody lied to you here, I still have another, right? I have an antidote.
We had the venom antidote.
Yeah, exactly. Right? Yeah, because you cannot avoid black swan. It's the reaction plan, right? Quality engineering, the reaction plan. What if something goes, then something can save it.
We have a solution.
Yes. Yeah.
All right. Well, before we wrap things up, let me say it again. If you're enjoying this content, please make sure you hit the like button. If you think your audience might enjoy it, feel free to share it. And more importantly, if you want to see more, please hit the subscribe button. Thank you very much. And thank you, Stacey. I truly appreciate you sharing your story and insights into the world of real estate and other investing. If people want to reach you, we'll put your contact information in the links here. And I really want to wish you a fantastic day. It's been a wonderful conversation.
Thank you so much. You too. Thank you. Thank you. Thank you. Have a good day. Bye-bye.